Hey everyone, this is Brian from Bearable Traders. It's Wednesday, April 7th. Hope everyone had a good day today. We had a good day on the markets, day trading and swing trading as well. So as I mentioned on the weekend video, I kind of felt that the Qs were going to be good for a continuation run, and that we've certainly had that so far this week. And some comments from the Feds, I think towards the end of the day today, looks like we're going to have a continuation with the Qs, especially the tech sector. So we've been positioned that way for this week, and it's looking good so far. So you can see here on the week, we did have a bit of a choppy week, just throwing up those charts quickly. We'll get into a little more detail here in a second. And yeah, we'll take a look at the charts and see where we might be heading for the rest of the week. And before we go any further, this is my book on Amazon, How to Swing Trade. If you have not checked it out, it's there for the taking. So let's get on with taking a look at where we think we're going to go for the rest of the week here. So let's start out with the treasuries, because yields have been important, not so much maybe in the last week or so, but we have been sort of consolidating, churning around here. You can see we had a little bit of an up day on a lot of the treasury yields, down day on the TLT, which is the price of the bonds. So still keeping an eye on this. Again, 1.8 has been the sort of close to the high, and we'll be watching that to see if we start to break above that level. But right now we're still a bit below that level. But I think if we start to move above that level again, 1.8-ish on the 10-year on the yield, I think we'll start to run into a little bit of challenge here in terms of the Qs again. Right now, it seems all systems goes, full steam ahead. You can see here, this is actually the 10-year Treasury. We're kind of flattening out here, doing some churning. We've come back to this moving average, and I guess the jury is still out as to whether we're going to continue higher or just consolidate sideways. All the indicators, RSI, stochastics, MACD, they're all turning over. Histogram sloping down, so it looks to me like we're definitely flattening out here, at the very least for a while. So no concern there. And again, TLT, this is the price of the 20-year Treasury bond. You can see here we are down today because yields were up a little bit. But again, getting pretty extended here, so it looks like we may be heading lower on this. Again, this is an area that's been prior support, then it was prior resistance, and now we've hit resistance again here. So we may just again churn sideways for a while, which means yields will also churn sideways. Transports, we had a big up day on Monday, and now we've had a couple of pullback days. I mentioned this in the trading room at the closing bell today. Again, getting really extended from this moving average, and you can see each time we got kind of extended from the moving average. Eventually we did a bit of a pullback here to the 20 moving average. So I kind of feel like we're going to probably churn sideways a little bit here until the moving average maybe catches up again. But again, I think we're going for kind of a bit of a choppy week for the rest of the week here. We are a little overbought here, so I'm not surprised if we get a stall or a pullback, pause to refresh. The Dow, again, sort of an indecision candle on the day. We've had 2 days kind of like that after this big Monday we had. Volume's really dropping off here, which is kind of interesting. Doesn't mean we can't go higher, but seems to be not a lot of buyers or sellers. So usually when you have a lot of buying, it's often associated with institutions. They seem to be sitting out a little bit maybe, but they're certainly not selling either. This is the index that I noticed that really was having some struggles today, and it was down the most on the day, 1.6%. These are the small caps, the IWM, and so it represents a Russell 2000. You can see here we're kind of up, we're kind of almost making a bit of a head and shoulders here. So you can see here the left shoulder, head, and now we're kind of making a right shoulder. I doubt we're going to break down here. I mean, this could be a level, this 215 level, where we find some support again. We could go back down to 210. This would definitely be we lost this level, that would be definitely concerning, but I really don't think we're going to lose that. Again, volume pretty light on the day. Yeah, all the indexes are sort of, or indicators are kind of flattening out here. Again, nice day on the Qs. A bit of an indecision candle yesterday, but it looks like we are going to push higher. This is the 335 level that I'd be looking at. By the end of the week, we may get there, test an all-time high. Again, volume really anemic on Wednesday and Tuesday as well. Volume just, just dropping off here each day. It's a thing that would be a little bit concerning. We are really overbought here on stochastics. You can see that. And it looks like we are rolling over a little bit here. So flattening out on the histogram. So again, we are getting a little bit extended from this, these moving averages, and maybe we need to do some consolidation, pull back here. SPY again pushing out. Don't know if that was at an all-time high. I believe it was. I close 40.77, close 40.79. So just marginally higher close, all-time high. And again, volume, a little anemic. Same story here. And the dollar, we had a real pullback here in the last 4 or 5 days. And I got pretty extended again from these moving averages. We've pulled back to the 20. That'll be interesting to see if we actually hold here. Of course, if we get a bounce, then it won't be good for gold, silver, and emerging markets. But emerging markets have been struggling anyway, especially China with overhang of some of the possible regulation from the Communist Party. But dollar tried to hold the 20 moving average today. So we'll keep an eye on that, and that can affect some of the stocks in play, like I said, gold, silver, emerging market stuff. The VIX told the story here today, in my mind. We wouldn't really make a lot of headway on the indexes. It was a bit choppy, but you can see here this is sort of the fear gauge, and you can see here the fear is just leaking out of the market. When people start to get worried, they start to buy options. Price of the options go up, and that usually drives the VIX up. But in this case, there is definitely no concern, no fear in the market that the stock market's going to roll over. So I think overall we still look strong. Maybe going to do a bit of a consolidation for the rest of the week. Maybe look for the Qs to push higher up to the 335 level. Just a quick look at the sectors before we wrap things up again. You can see here consumer discretionary kind of getting a little bit toppy here. Communication and of course the technology sector still had a really nice day today, strong day. Materials, industrials all pulled back, staples pulled back, healthcare. Financials are looking good. Remember, we've got the earnings season coming up next week. Starts with kicking off on the banks. I know JP Morgan, one of the bank stocks today, financials, was quite active today, and so look for some strength in the financials going into the rest of the week and into next week as we get close to those earnings. So energy, not much to say on that day, and then a bit of an indecision candle on the utilities after this amazing run up here. Same comment on real estate. So yeah, that's it, everybody. Have a great rest of the evening or afternoon, whatever time zone you're in, and hopefully we'll see you in the Bear Bull Trading Room in the morning, 8 o'clock live on YouTube. We kick things off right into the market open and then trading the open. So I know we had the chat room open all morning right into the open today. So I had a bunch of people from YouTube join us today. That was great. So join us tomorrow, 8 o'clock, and hope to see you there. Bye for now.